Okay, wow. The KOSPI just literally shattered records, surging to an unprecedented all-time high of 8,047.51. We are looking at a massive, and I mean absolutely massive, structural shift in capital allocation right now. And this is aggressively setting the stage for tonight's critical U.S. market target. Look, if you are trading the U.S. Open, the signals we've seen generated in just the last few hours, they are absolutely vital.
So, welcome to this urgent explainer. We're going to take a really fast-paced dive into the complex cross-currents behind today's Asian market close. What we're looking at is this fascinating convergence of geopolitical easing, rapid sector rotations, and some frankly massive institutional maneuvers. And all of this, it's going to dictate the pre-market action plan. All right, let's jump right in and decode exactly what just happened.
Let's start by just validating our baseline data here. We are looking at a massive 2.55% gain in a single session. Now, you might be thinking this was just a broad, retail-led euphoric rally, right? Actually, scratch that. It wasn't at all. This move was incredibly concentrated. It was driven heavily by securities firms, who pumped over 1.39 trillion Korean won in net buying across the tape. The sheer velocity of this breakout means we absolutely have to look under the hood. We need to see who was actually buying, and honestly, more importantly, who was selling. And when we look under that hood, a stark divergence is just staring right back at us. Domestic institutions are pushing electrical components significantly higher. We're talking names like Samsung Electromechanics gaining over 17% and LG Innotek up over 23%. That is huge. But here is the catch. They did this straight into the teeth of active foreign selling. Foreign investors were aggressively exiting these exact same names. You guys, that divergence? That is the single most important signal we have heading into the U.S. session. Part 1, unpacking the transmission path. Let's get into it. So to really understand why this divergence happened, we need to trace the underlying logic. It's kind of like a giant puzzle, and two completely independent catalysts actually collided to create today's explosive market action. The first catalyst, it originated totally outside of the tech sector. It was all geopolitics. We saw some meaningful progress in the U.S.-Iran MOU negotiations, mainly accelerated by the current administration's flexibility on enriched uranium talks. The market immediately priced in a higher probability of an open Strait of Hormuz. The result of that? WTI crude plummeted by 4.23%. And when oil gets cheaper, who wins? Well, foreign investors immediately realized it's heavy shipping and automotive, so they rotated their capital instantly, exiting the electrical components sector to price in higher expected profitability margins in heavy industry. But wait, simultaneously, the second catalyst was firing off right within the semiconductor supply chain. The broader AI and semiconductor cycle is advancing, which we saw validated a bit earlier by a roughly 2% jump in the SOX index on AI developments. MLCC components, which, usually lag that initial semiconductor upturn, are now catching a massive cyclical rebound. For Samsung Electromechanics, this was anchored by a concrete 1.55 trillion Korean won contract. To put that into perspective, that translates to a massive $1 billion contract for silicon capacitors. So here's the setup. While foreign capital chased that energy re-rating, domestic institutions absorbed the semiconductor cyclical upside. Moving on to Part 2, Market Execution Mode. Now, to formulate our U.S. strategy, we have to look at the total dichotomy happening just under the surface here. As we discussed, foreign capital rotated entirely out of tech to chase heavy industry and transport, all based on that WTI drop. What does that mean for us? It means domestic institutions, specifically securities firms, were left holding the bag, absorbing the electrical component supply entirely on their own. Sure, they pushed the index to an all-time high, but they are acting as the sole support layer right now. There's no broad consensus here, guys. This rally is resting on a highly vulnerable single buyer foundation. And that brings us to the absolutely crucial metric, 38.57%. In the very same session that institutions drove the market to record highs, the institutional short-selling ratio surged from roughly 22% up to over 38%. That is a 70% spike. Think about what that actually means for a second. This proves today's massive institutional buying isn't just pure, unhedged conviction. No way. They are building a massive hedged short book right alongside their net buying. This elevated short ratio acts as an aggressive reversal mechanism if external conditions shift tonight.
All right, Part 3, the U.S. session final checklist.
So, with that heavily hedged foundation in mind, the entire Asian supply chain thesis absolutely requires U.S. validation now. And here is your absolute line in the sand for the tech trade, 29,806. The NASDAQ 100 futures price must hold above this exact level at 5 a.m. Eastern in the pre-market. If U.S. institutions hold futures above 29,806, it confirms our semiconductor cycle thesis, and the Asian electrical components upside scenario remains conditionally valid. But if it breaks below, that pre-market signal is entirely unconfirmed, and that institutional short reversal mechanism we just talked about, yeah, that is going to activate. Then, at exactly 10 a.m. Eastern, keep your eyes glued to the wire for the CB consumer confidence print for May. The consensus right now is sitting at 91.9. To maintain the whole economic backdrop that this manufacturing and shipping re-rating heavily relies on, the result absolutely must beat 91.9. Let's bring this all together and see how it builds into a complete binary trading checklist for the next few hours. First, NASDAQ above 29,806. That means the upside is valid. Below, unconfirmed. Next, CB confidence above 91.9. That means consumer concerns diminish and tech climbs. But if it's below, recession fears mount and the NASDAQ faces real downward pressure. Finally, keep a close watch on the U.S. 10-year yield. A move above 4.6% directly compresses those profitability calculations that drove today's massive manufacturing re-rating. Keep this matrix front and center in your mind as the tape starts moving. Finally, part 4, the closing bell. As we wrap up this explainer, let's just step back for a second and look at what this specific, violent convergence of data really means for the broader AI infrastructure cycle. In the AI CapEx cycle, transitions aren't marked by simple price action. When foreign capital actively exits a leading cycle name and domestic institutions simultaneously step in to absorb it while lagging cycle positioning builds, well, that exact collision happening on the exact same trading day, that is the definitive signature of a cycle transition. And Samsung Electromechanics just provided us with that exact structural blueprint today. So the data lines are drawn and the hedge positions are totally set. We've seen the blueprint of a major cycle transition today, but the true test lies in the U.S. Open. So the big question we're left with is this: will U.S. institutions validate this massive Asian tech rotation, or is that 38% short seller trap about to spring shut? Keep your eyes on the tape. And hey, if you want these deep dive Asian market signals decoded right before the New York opening bell rings, make sure to subscribe. We'll see you next time.